Well, hello everyone. Kind of an interesting one. I found sort of a unique chart, and a lot of people are talking about the election. They're talking about this year being different in housing, and our regular numbers. We're going to get to those. I don't want people to panic about them, or maybe if you're a buyer, you're just licking your chops. But we're going to talk about really kind of probably one of the biggest things that's on people's minds is do election years really have a profound effect on the housing market, especially here in California? Has that been the case? So we're going to start it off and take a look at that. Let's get going. My name is my name is Stephen Meade with Domicile Real estate for people who love houses. This is our housing market outlook here for Southern California, kind of our update for August 27th, 2024. We are almost at the end of summer. We are heading right into Labor Day weekend. But let's go ahead and talk about elections and housing for a second, because I came across a chart that I found particularly interesting. So let me go ahead and pull that up here, because like I said, this one I thought was very illuminating. So this is a chart, and I want to tell you, I can't take credit for this chart. This is produced by the Economics and Research Department of the California Association of Realtors. My good friends, Jordan Levine and Oscar Way, who work over there. And they thought it would be interesting to take all this anecdotal data about elections we talk about and actually create some charts. And so this is taking a look. The dark blue is the post 1990 average, right? Like just every year since 1990. And then the lighter blue line is the election average. And so what is this actually looking at? What this is looking at is it's looking at seasonality through the year. So we got January through December, and it's talking about home sales growth. So this isn't prices, this is the number of houses changing hands, right? We frequently talk about, is there a big home buying season, right? And so what do we notice? If we talk about non-election years here for a second, we notice that, boy, things really start ramping up in January, and then they kind of coast through to the summer where there's some maybe May, June, July, there's very modest home price growth. So basically, it's kind of like posting through August is a pretty flat month, and the home sales kind of decline for it through the fall, and then kind of coming back up again as we head towards January the next year, right? That is a typical non-election year. But if we look at the election average for election years since 1990, we notice something interesting. The spring is particularly hot in election years, right? Like, I mean, that spring numbers just go, I mean, huge growth. I mean, 10% sales growth month over month. I mean, that's big. Things still coast right through the summer as people start thinking about the election. In fact, in August, sales have actually started declining a month earlier. But then something fascinating happens in election years. It turns out that through September and October, so this is still pre-election, those home sales actually go up again. So we actually find that election years are positive for home sales. We actually find, instead of the typical flat fall, we actually see home sales increasing in election years. I thought that was really interesting stuff to look at. Definitely something that you should be kind of thinking about as we're kind of going into this election year. So when I hear people saying we want to wait until after the election, honestly, if you do that, you're actually going to be jumping in with a bunch of other buyers, which is not necessarily the place that you want to be. Usually that December is pretty active. And now what we're going to do is we're going to go ahead and we're going to take a look also. I want to take a look at and go through our normal stats as well. Those of you that watch this pretty regularly, you'll know we do that. So I'm just going to cue these up here and get these set. Just give me a second here. All righty, so I think we got these queued up. Let's see if screen sharing wants to cooperate. I think it will today. Yes, it's worked. Okay. So first off, these are going to look pretty dour, but I don't want you to be upset if you're a seller. And the reason why is because it's very important to understand something. Almost all of these are trailing, and we are in the middle. And by the middle, I mean literally right now, we are in the middle of school starting up, Labor Day weekend, which is historically end of summer. We kind of, and also we had a major change in business practices in the real estate business. So understand there's a lot of things for the market to be absorbing at this exact moment in time. And before the pandemic, we had quite a bit of seasonality, right? That end of summer was really a bit rough, and we noticed things kind of picked up through September and October, which we saw in that previous chart. So I don't want you, if you're a seller, to think that this is totally dour news, because this is a backwards look. This is about where things are this exact second and where they have been recently. So if we look at active listings, we see something that I think is a bit fascinating. We see this kind of gentle increase in demand that seems to slow a little bit every week for under 1 million. But look at what's happening in this 1 to 2 million. We've actually seen kind of a real uptick in active inventory. And I think that's because a lot of buyers in this group are in kind of this wait and see sort of approach. If we look at our new listings, that's actually pretty steady, though we've seen those new listings actually drop a little bit, or at least kind of be at a lower level. Here for that 1 to 2 million, we see they've really been kind of hovering in that range for LA and Orange County. And every 2 weeks, we're seeing, gosh, just about 2,000, a little over 2,000 new homes under 1 million popping up on the market for every 2-week period. That's been pretty much the case since April of this year. It's been in that zone. And if we look at new escrows, this is the one that I find a little bit puzzling, and I think this is going to be a bit of a reversal. And by the way, I want you to look a little bit, if you look back to where we were this year, if you look at that $1 to $2 million category, that red line, you'll notice that we had some kind of pretty steep declines, and then it leveled out and kind of coasted towards the end of the year. Under 1 million, it was a little bumpier than that, but you'll see there was even a bit of a second wind that happened towards the end of September there for home sales in that under $1 million category. I think that we're going to definitely see that coming this year. So the combination of lower rates, I think people are expecting the Fed. By the way, we're probably going to do another video somewhere in social media about the Federal Reserve and about the bond market and things that are really important to know and myths not to fall for. We look at our absorption rate, right? This is the one under $1 million. It's kind of holding in this steady zone. It's been there really since May, kind of trending this zone. But if we look at that $1 to $2 million market, that's the market that's really kind of taken a beating the last month or so, maybe, and has had a lot more volatility in that absorption rate. I find buyers in this range are pickier. We're also noticing there are a lot of people, I think, in this $1 to $2 million range. They have been waiting to put their homes up for sale because of where they need to buy. And so now that the conditions are more favorable for them buying what they want to buy, these kind of either move up or downsize buyers, which are typically in that 1 to 2 range if they're putting their home on the market, they are the ones who are now adding some of that extra inventory to the market. If we look at closed prices, again, this is going to tell us kind of an interesting story. At that entry-level price point, we actually saw a modest gain. Bear in mind, this is 30 to 60-day-old data because it is based on closed sales, not present contracts. We look at our median, that's holding steady with a slight decline, but look at what's happening at this upper end of the market. We've absolutely seen some declines in those closed prices from kind of that peak period that maybe was around that May, June, July timeframe, right? Like we've definitely seen the last month has resulted in a lowering of prices that we're seeing on things that are closing. Not entirely surprising, but again, I think we're going to find a little bit of a reversal is going to be coming in the next few weeks on that. So I'm kind of interested to see whether that prediction bears out or not. If we look at our percent still active after 14 days in the market, remember a higher number here means that a market is less competitive. And so by seeing these go up, we're definitely seeing both our under 1 million and 1 to 2 million are less competitive as of this moment right now. But like I said, I think as soon as we work through business practice changes, commissions, and end of summer all sort of happening, and back to school, all that happening at the same time, I think as soon as we work through a little bit of that in the next few weeks, we're going to see these come down a little bit and maybe be more of a steady number in line with where we were at last year. We look at our close to list ratio. That is actually kind of hovering just a little bit over 100%. So it does mean on average, homes are still selling for more than their list price, but not by a huge amount. And realistically, it's been years since we've been in that huge category where we're up, but we're finding really our market seems to want to be in this 100 to 101% range. I think that is a bit of the new normal, is that we see people pricing things um, just a little bit more closer to where their market needs to be. If we look at days on market for new contracts, this one again shows another indication of a market that is a little bit softer. Notice how both of our categories rose to 35 days. And remember, this is measuring the homes that have actually found buyers. These are the homes that have actually found a buyer and gone into escrow, not days on market for the market as a whole. So I would expect this to actually be an even bigger increase if we're looking at days on market for the market as a whole. And then we've got some news again that I think is going to give a little bit of fuel here to a pretty decent and pleasant for sellers September and October. And the reason why I think these are going to be pretty good is look at what's happening on this affordability. We've seen our rent has remained elevated, but look at that payment index, which is the blue line. When those lines get closer together, that usually is a precursor. It means there is some room on home prices. So if we see these mortgage rates continue, which really they have in the last week or so, if we see that continuation of those payment dropping and a little bit of price softness, there is going to be a point where that really does spur on the demand. I do expect to see that. And as always, we've got our CPI index here just plugging along gently as it is going. You'll notice that while rents really had a big, huge upheaval between 2018 and 2023, they've really been tracking with inflation so far this past year. This has actually been pretty close. Maybe the rents have gone up a little bit higher, but you can just watch this roller coaster ride, right, of the payment index. What I think is interesting is looking back historically, look at that point around the end of January and the beginning of February, right? We saw that payment index and that rent index get very close together. And what happened? Prices and interest rates shot up simultaneously to spread those apart again. And we see another kind of little bit of sort of a confluence here coming together. I think that means there's a little bit of room for prices to possibly go up in that time period. I think most economists are actually calling for some pretty modest but very noticeable appreciation in the next 6 months. I expect that to be about true. What does that mean on an annualized basis? I think that means somewhere in that like 4 to 6% range. That's just kind of a general consensus of some of the things that I've seen. Anyhow, thanks so much for watching. Questions and comments, we love them. Do not forget to like, subscribe, and hit that notification bell. And of course, if you are looking to purchase or sell a home in Southern California and you would love to have our expertise, we are interested in talking. Our contact information is in the description below, and we'll see you again real soon.